But now things are happening so fast, so monumentally. Who knows what's going to happen with Iran? It's not going to be good, whatever happens. I always tell you guys too, you guys still have no idea how big this precious metals trade is going to be. So much is going on right now. It's almost hard to keep up with. I'm going to give you some of the key points that you need to know about right now. There's a global growth slowdown, which you've known for a while. That's not moving quickly. Everything else is moving quickly. There's a potential counterattack coming from Iran about the strike against their embassy in Syria. And what is going on with precious metals prices? They're absolutely surging, which leads me into the other thing I want to talk about is I'm going to tell you guys knowing how and when to sell shares of a stock. I've been talking about the slowing global economy for a while, and in a video I put out, and somebody made a comment about, well, this bank of wherever says that they're going to grow by 3% or whatever. But here's the thing. We've got recessions right now. Ireland, UK, Japan, these are pretty big economies. China is absolutely slowing down. I'll say a few things about that. Finland is in recession now. But what you need to remember too is a lot of times it's a moral hazard where the government can make new government jobs, and all of a sudden the unemployment rate goes down and the GDP spikes. You can say we'll hire 100,000 more government workers, and that politician looks pretty good. The numbers look like they're doing well, but you're actually weakening the economy. The more government workers there are, the less efficient and less fair an economy is. Within reason. You need some government workers, of course, but they play games with this stuff. They hire too many government workers, always, and they're completely inefficient. But this comment about China, actual growth seems to be below the official figures. What a big surprise. China is manipulating the data. There's substantial deflation. The housing market has yet to stabilize. The domestic stock markets have fallen significantly. Domestic confidence is flagging, and foreign investment in 2023 was at a 3-decade low. As China goes down, most of it based on the real estate, as they continue to go down, slow down, that's going to affect all of the world in a big way. A lot of the growth that we enjoyed over the last few decades, we attributed it, a lot of it, to China. Now that influence or that pressure will be going the other way, where it's going to be a drag on global economy, which will make things like the recessions in Finland and Ireland and United Kingdom and Japan get even worse. And I stand by my guns that the recession is going to be coming here to America. And I showed you in a video the other day too that when interest rates start coming down, that is when recessions often start. And the reason I'm going to get into knowing when to sell is because we had a lot of questions lately, because a lot of the stocks we're talking about are going up in price a lot. Because partly the ones that we talk about the mining companies, gold prices today are absolutely surging. I got frustrated. I wrote in my script, here's how much gold is trading at, here's how much it increased, and I had to readjust those numbers 4 times. I'm not kidding. I would do the numbers, come back a couple minutes later just to double check, and gold prices were up another $12. It was just going, and so they started to slow down now. But last I looked, they're at $58.90 per ounce, and silver was up 5%. You watch what happens to silver mining companies. If silver goes up 5%, do the mining companies also increase by 5%? No, their share prices will increase by a lot more than 5%. Same with gold. Some of these gold mining companies are bringing out millions of ounces. The good quality gold mining companies. Don't just buy any commodity company or any precious metals company. You got to buy the good ones. A lot of these companies are bringing out millions of ounces of gold. And now they're making an extra $58.90 per ounce. Last I looked, it was $2,422 per ounce of gold. Do you remember we were talking about, is gold going to break through 2,000? We were talking about it from $1,800 a lot. We were talking about when it was $1,400. That's when my father and I started buying into this gold. Physical gold, the mining companies went the absolute wrong way. And it was a completely obvious gift for any investor to get involved with these gold mining companies when all of a sudden, in a very short window of time, these mining companies' profit margins are going to absolutely explode. And it's happened so fast that it hasn't hit the financial results yet. But as they start releasing quarterly and annual results, you'll start to see, okay, we made many millions of dollars more than we had in the past. The share price will always follow suit. And that's one of the reasons why we're talking about knowing when to sell. But it's not just that, but even look at oil prices. They're up $2.44 per barrel today, last I looked. A lot of that has to do with what I told you about in our previous video, the potential for reprisal from Iran about how Israel hit their embassy in Syria and killed 8 high-level IRGC operatives. That's the Iranian Revolutionary Guard. And so Ramadan put a hold on the response, but the response will come. We just don't know where or how or what it's going to look like. So I always tell you, uncertainty is worse than the actual news. When we don't know how Iran's going to respond, that's really pushing up oil and gold prices a ton. When there's going to be military conflicts, escalations, gold will help you preserve your wealth by increasing in price with the inflated risk premium. And I just want to say again, gold prices at $2,422 an ounce. But what has happened since the Israeli attack on the Iranian embassy? The other day, a couple days ago, they hit and killed 3 sons of a major Hamas leader. And this is from the White House, this comment. There's a very credible threat of Iranian retaliatory strikes against Israel. The White House said Friday, as U.S. President Joe Biden receives constant updates on the situation from his national security team. Well, yeah, big deal. It'd be weird if he didn't. But here's another moral hazard you got to watch. Benjamin Netanyahu, very unliked, very likely to be kicked out of office as soon as the war ends. I've even heard talk of him going to jail after the war ends because he's done a few things which are illegal. So the problem is that Benjamin Netanyahu, needs this war to go on. He needs to extend the war because as long as the war is going on, he's in a better place. As soon as it's over, as soon as it ends, he has to worry about his whole future, everything. But what happened the other day with inflation? It bounced. Like I told you, it's going to be bouncing. It's going to go a lot higher. And with these higher commodity prices, that's also going to drive inflation even more. And so when those numbers came out, the expectation for rate hikes got pushed further down in the year. We were expecting 3 or 4 rate cuts in the first half of the year, maybe 5 or 6 even throughout the whole year. And that's why I made those slices of investment wisdom that I give to you guys. I took a part of an interview with Gareth Soloway, and he was talking about how the market is expecting a lot of rate cuts this year. And then as they get fed a dose of reality that there won't be that many rate cuts, and not as soon as they thought, not as aggressively as they thought, that's going to put a lot of downward pressure on the markets. And that's what you've been seeing the last few days. Markets I saw earlier today were down 200 on the pre-market, I think it might have been live market, but down 200 points on the Dow, for example, and across all markets, also down. But at the same time, gold prices going to the moon. There's how you invest well. You're avoiding the risk on one side, and you're getting into things that are going to pay off in a big way. And I always tell you guys, I'll tell you again, 2 things. When gold prices dropped $20, $30, people were worried about it back in the day, and they would say, what do we do? Are we worried? Should we sell? And I always said the same thing, and you guys know if you've been around, you've heard me say this. Don't ever worry about gold. And now we're sitting pretty, looking at it breaking above $2,400 an ounce. I always tell you guys too, you guys still have no idea how big this precious metals trade is going to be. Check back with me, circle back in about a year or so, and you'll laugh about this comment now. But what always comes up, one of the most common questions that I have ever gotten in my entire career, and it's come up a lot lately because of the strong performances, not just our gold mining companies, our silver mining companies, the oil and gas companies too, which are obviously going to be doing very well. And a lot of our technology companies, all our stock picks are, you can't get too cocky because it's a good winning streak, and after a winning streak can often come a losing streak, but we've been nailing it out of the park so far this year. So the question comes up, the most common question, how do you know when to sell? And I say, thank you for the question. Here's how you know. And I made a list of 11 ways, and I sent it out to all of the people who are members of the Peter Leeds Army and the Peter Leeds Army exclusive newsletter, which you can join for as low as $3 a month. I sent that out yesterday, And I picked out for you guys right now in this video a few of the most significant ways that you can know with certainty and clarity when you should take profits, when you should sell your stock. The first one was the relative strength index. That's an oscillator between 0 and 100. When it gets up towards above 70, that's considered overbought, and therefore probability suggests that it's most likely to fall rather than increase further. And if it gets below 30, that's considered oversold. But those numbers, 30 and 70, I don't even use that. You only want to act when it's really overdone. So for example, when the RSI gets above 80, especially even better if it gets above 85, you know that stock is highly likely to start coming down in price. And when the relative strength index gets extreme, below 20, then you know that the highest probability for those shares going forward, the bias will be for the shares to start trading higher. So if you're wondering about selling a stock, you check the RSI. You can do it through like bigcharts.com, any free charting website. If you're thinking about selling and the RSI is really high, then maybe you should definitely start lightening the load. But the first thing I said in that report though, number one, and it wasn't a way to know when to sell, but the most important thing, always scale in and scale out of your positions. So you want to invest $1,500, don't just take $1,500 and go, I'll buy that, boom. Put it in two different buys. Buy once and buy the other half a couple weeks later. It'll get the emotions out of it, the impulsiveness. It will be replaced with discernment. Wise investing. Whether you're buying or selling, always do it in portions. If you would buy the stock again today, if you had fresh money, would you buy that exact stock? And if you wouldn't, if there's a reason why you wouldn't, maybe you do want to lighten the load. And of course, things like buy the rumor, sell the fact, which I go into great length about in my book, UP.THINKING, where if there's a massive thing that's known by everyone that's expected to be good for a stock or a cryptocurrency or an investment, they will bid up that investment all the way to the point where the rumor becomes reality. And then if there's no more price drivers behind it, they always come back down from overvalued levels markedly. And the best example that I always give you guys is that Sirius and XM satellite radio were going to merge. Everyone thought, wow, they'll save all the money, they'll have no more competitors, etc. So the price went higher and higher and higher to the point where they merged, and then it was a very short window of time before it dropped 85%. That is a great example of how buy the rumor, sell the fact events work. But another one of the items about when to sell I wanted to call out for this video about knowing the difference between trading in sympathy and company-specific risk. If all the biotech stocks drop about 15%, but they all do it together, then it becomes a play. If you think that biotech is going to zero, then maybe be worried. But generally, when they all drop together, they'll all rise together later. But if biotech drops, or any industry, the mining industry, energy industry, technology, they all drop 15% together, that's trading in sympathy. If one company drops 15% while all the other companies in the industry do not, that's a company-specific risk. That's something you need to understand and know why it's doing that, and maybe you're going to want to get out of that stock if it's going the wrong way. And I did save the two best ones for last. I ignored all the rest that's in the article for the Army members, but these two are the best ones. Number one, when there's a fundamental justification. If the stock price, like for example, any precious metals company ramps higher, did it do that for a fundamental reason? If the thing they're digging out of the ground and selling is exploding in price, then yes, it's okay, the prices went up a lot, and they'll probably go up a lot more, and they'll be able to hold those gains. If they surge higher for no good fundamental reason that you can identify, a lot of times that could just be a buying surge, and you maybe want to avoid those stocks at that point. And the other thing, before I get into the best one about the low trading volume, is that what I always do, myself personally, is that if you're thinking about selling, or if I'm thinking about selling, if I see one of these things, that's not enough to convince me to sell. If I see the relative strength index being too high, no more price drivers pushing the stock higher, or some of these technical analysis indicators that suggest that the stock's going to come down. If there's 2 or 3 or 4 things saying sell the stock, that's usually good reliability to get out of the shares by scaling out. scaling out, sell a portion. Unless something monumentally deteriorous happens with the company and you want to just ditch your position, that's different. But in general, that's not the case. So you want to slowly, gradually make your decisions over time. And I talk about technical analysis. You can see things like double tops, shooting star patterns, outside bearish engulfing setups, dark cloud cover. One of the best ones is a doji trend reversal indicator after a big run up. It gaps higher to a doji. That's where it opens and closes at the same price in the day after gapping up. That almost always is a trend reversal indicator because it's signaling indecision among investors at these levels, as are spinning tops that you can see on the chart. And a lot of people have taken my charting course and they get to understand all this and see it. They can look at a chart and know which way the stock's going to go based on the patterns on the chart because you know what the investors are going to do next. And when you know what they're going to do next, you know where the stock price is going to go next. It doesn't have to be that complicated, right? It's actually a lot simpler than people realize. But the last one I want to talk about was low trading volume. A stock can jump up 30%. If it's on low trading volume, not a lot of shares making that move happen, that move almost always comes back down. What you want to see is a lot of activity, a lot of buying, pushing the prices up, a lot of people involved in the trade, and that will generally imply that the move may be maintainable, may be lasting. If it's on light volume, never ever trust it. And if you're looking at any trading chart pattern on light volume, you can't rely on it. That's why penny stocks are so difficult to do technical analysis with. And that's why I developed what does work with lower priced stocks in terms of technical analysis. That's what my trading chart course is all about. But now things are happening so fast, so monumentally. Who knows what's going to happen with Iran? It's not going to be good, whatever happens. So I'm keeping an eye on it. I'll keep talking about it. If you'll let me keep talking to you about it, all you have to do is subscribe. Thanks so much, guys. We love you. Keep educating yourself.